Hey everyone, and welcome. Today, we're gonna go on a little financial shopping trip together. We're gonna pull back the curtain on the hidden rules behind pretty much every single purchase you make. Sound good? Let's dive in.
Okay, so let's kick things off with something I bet every single one of us has done. You walk into a store, you see that shiny new phone you've been wanting, you hand over your money, and boom, it's yours. It feels super simple, just a straightforward swap. Easy, right?
Well, what if I told you that simple little purchase is actually a super structured, totally legal trade that follows a specific set of rules? Yeah, seriously. And here's the cool part. Once you get these rules, you've basically got the key to understanding, well, everything, from how banks work to how the stock market operates. All right, so before we get too deep into our shopping trip, we need to know the rules of the road. There are two, let's call them golden rules, that every single valid trade has to follow. So first things first, a trade isn't just, swapping stuff. At its very heart, it is a legal agreement. And that word legal is the secret sauce. It's what gives the whole thing teeth and makes it official. So here they are, the two big conditions. First, you need at least two parties. I mean, you can't trade with yourself, right? That's kind of a no-brainer. And second, there has to be a give and take. It can't be a one-way street. Both sides have to get something valuable out of the deal. The fancy legal term for this is consideration. This is exactly why a gift, or, a robbery, isn't considered a trade. Okay, so we know the golden rules. Now, our shopping trip is about to hit a fork in the road. It turns out, pretty much every single trade in the entire world can be sorted into one of just two main categories. And here they are: buy-sell versus borrow-lend. It's actually pretty simple when you break it down. Think of it like this. A buy-sell is when you swap different things right now, like your money for that new phone. But a borrow-lend, that's when you use the same thing now and just promise to return it later, like getting money from a bank and paying back, money. Okay, let's take that first path and really dig into the buy-sell trade. And yeah, we're going right back to that phone purchase because it's the perfect example. So let's look at the key features of this instant swap. First, you're exchanging completely different things. Your cash for their phone. Second, it all happens pretty much instantly. And third, and this is a big one, ownership changes hands for good. Once that deal is done, that phone is yours forever and your money is theirs. The whole thing hinges on that agreed upon price. Okay, that's one path. But what about the really big purchases in life? Buying a car or paying for college. For things like that, you probably can't just pay cash. You might need a loan. And that, my friends, takes us down our second path. Now you'll see this is a totally different ballgame. Here, you're exchanging the same thing, just over a period of time. The bank gives you money, and later on, you give them back money. See? The whole deal is built on a promise. Your promise to return what you borrowed. And for the privilege of using their money now, there's an extra charge. We call that interest. All right, quick knowledge check. Let's see if this is sinking in. Think about a student loan you might get for college. The bank gives you money to pay for your tuition. So, is that a buy-sell trade or a borrow-lend trade? Take a second to think about it. If you said borrow-lend, you nailed it. It's a classic example. You're borrowing money and you're going to return the exact same thing, money, just a little later with some interest tacked on. You're not buying the cash. You're really just renting it for a few years. Okay, so far, all our examples have been pretty straightforward, just you and the seller. But what happens when things get a little complicated? Like, what if you're buying something really expensive online from someone you've never even met? How does that work? This right here is the big problem, isn't it? The buyer doesn't trust the seller, and the seller doesn't trust the buyer. You want that cool thing you found online, but there's no way you're sending a bunch of money to a total stranger. And from their perspective, they're not shipping their valuable item until they know for sure they're getting paid. So you're stuck in a classic standoff. So how do you solve this? You bring in a neutral third party, a guide, if you will. This is called an escrow service, and a lot of times it's a bank. Here's how it works. You, the buyer, send your money to the bank, not the seller. The bank then holds onto it and tells the seller, hey, we've got the cash, it's safe, go ahead and ship the item. Once you get the item and confirm everything's okay, you tell the bank, and then they release the money to the seller. The bank basically acts as a trusted middleman to make the whole deal possible. All right, let's zoom out a bit. I want to map out the entire journey for both of these trades because looking at their timelines side by side really shows you just how different they are.
Okay, so check out this table. It really lays it all out. Look at the buy-sell trade. It's basically a two-step dance. Step 1 is the trade date, or TD. That's when you agree to the deal. Step 2 is the settlement date, or SD, when you actually swap the stuff. Quick and simple. But now look at the borrow-lend side. It's a much longer story. You've got the trade date where terms are agreed, then a dispersal date when the cash is actually handed over, and then, way down the line, a repayment date. It's a journey that takes time.
Wow, we have covered a ton of ground on our little shopping trip today. So before we head home, let's pack up our toolkit with the absolute essentials. These are the big ideas you'll want to keep with you.
Okay, if you only remember 3 things from our time today, make it these 3. 1. A real trade needs at least 2 people and a fair give and take. 2. A buy-sell trade is an instant swap of different things. And 3. A borrow-lend trade is an exchange of the same thing over time, with interest. Honestly, if you've got those down, you've got the foundation for understanding almost all of finance.
So I want to leave you with a final thought, a question really. Now that you know the rules of the game, as you go about your day tomorrow, when you buy a coffee or pay a bill, you'll know the hidden structure behind that transaction. You'll know if it's a buy-sell or a borrow-lend. My question is, how is that going to change how you see the world of money around you?